Happy Friday. Elon Musk is moving to Texas. Over 150 Cadillac dealerships decide not to sell electric vehicles. And we're having some fun here with Tesla today with Friday night at the fights. Emmett Peppers versus Michael Berry. Let's get into it. Tesla stock price on the day closed less than $1 away from that 600 mark. I told you yesterday I thought we'd close above 600, and I was off by like 65 cents or whatever it is, 500. I think it closed at $599.04. After hours, it went above 600, then settled at 600. Right now, we are 35 cents down for the day. So $5.99, pretty close, right? So next week, I expect that to climb somewhere between 600 and 625. We'll have some closes at all new time highs above $600 a share next week. And then the following week, I expect to pick up that next 25, 50, possibly even $75 as we approach that December 18th timeframe and get closer to that S&P 500 mark. Overall volume was light today on shares with a little bit less than 30 million shares traded today. So if you're not familiar with the story, obviously we have Emmett Peppers, who's a Tesla bull. He did 100x his money in Tesla this year. He went from being a pauper to $1 million, then he took a huge options bet on that $1 million, and he turned it into like 30 or 40 million bucks. Then he made another options bet for $2.7 million with a strike price of $700 a share as it approaches S&P 500 that expires January 15th. If he hits that, he'll 20x his money. And that's huge, right? So he's risking that, knowing that it's a big bet. On the other side of the ring, we have Michael Berry, who made fame from the Big Short movie. That was part of the mortgage-backed security crisis of 2008 when the whole market went to shit. So we got the short seller, Michael Berry, with his big bet. He's worth about $100 million. How much he actually put down on the short against Tesla, I don't know. There's been a lot of shorts who've lost a lot of money. But is it possible that they could both win? We're going to keep the scorecard as we start approaching the S&P 500. But yeah, the answer is yes. I think that Peppers could definitely hit his bet. Strike price of Tesla could hit $700 prior to S&P 500 inclusion, or definitely before his contract expiration, as well as Michael Berry could win after the pullback of S&P 500, depending if he keeps a short position. All right.
Welcome to Trading Nation. I'm Seema Modi. Tesla taking off Thursday after a big call from Goldman Sachs. The firm upgrading the stock to a buy as electric vehicle adoption accelerates, raising its price target on Tesla to get this $780 a share, a street high among the major firms. Tesla is already up over 600% this year. Can it run another 30? I'm joined by Matt Maley and Miller Tabak, Delano Sapru of New Street Advisor Group. Gentlemen, good to see you today, and it's certainly been such a hot stock to follow, Delano. Do you think it can continue to push higher, obviously throwing out some of those traditional valuation metrics that analysts tend to use when sizing up a stock?
Yeah, Seema, it's a highly talked about name, and I do believe it could push higher, especially in the longer term. I think some of the things that I've been looking at is when to get into the stock more heavily based on possible pullbacks. But if you're a long-term investor and someone that knows and sees the valuation framework this should be valued at, then it's possibly a good time. And one thing I think is, we obviously know about the electronic vehicle market, and Goldman talked about in the report the possible share size that they think that Tesla would have. I really like the execution when it comes to delivering vehicles, and that's not even to talk about the cutting-edge technology on the battery cell side of things. So I think there's so much upside to look for, but it's something you have to be very careful on if you're an investor and making sure that it fits your horizon and fits your objectives.
Yeah, you wonder if they'll issue more stock, Matt, at some point. I mean, you just look at Elon Musk's, his own net worth, how that has gained so much in tandem with the stock appreciation so far this year. But in terms of competition, you've got these new players from Volvo to Lexus with their own electric vehicles. But it was interesting, the analyst from Goldman Sachs said actually competition is a good thing from Tesla because it only increases the share of the electric vehicle market.
Yeah, and that's a very good point. So I agree that over a longer-term basis, their target is very achievable. However, it's going to be interesting here because I think for those who like to be a little bit more active in trading this stock, obviously this is a very volatile one. There can be some opportunities to kind of maximize your returns over the next year or so. I mean, it's kind of funny because back in 2019 when the stock was trading at 38, well, actually it was at 190, but post-split was at 38. I was pounding the table, say buy this stock for some technical reasons, and rode it all the way to 500. But then this August, when it got to 500, I said, sell it with both hands. And sure enough, it did pull back 36% after that. Now I wish I had gotten more aggressive again, and I didn't. But the point I'm truly trying to make here is that this stock, I think you want to continue to ride the wave right now. On a short-term basis, it still looks good. You look at its weekly RSI, its relative strength index, its chart there, it's overbought, it's above 70. But over the last 2 years, it has had to reach, it's got to get well above 80 before it saw any kind of meaningful pullback. So even though it's expensive for most stocks, it's not expensive for Tesla. I'm sorry, not expensive is the wrong word. Not overbought for Tesla. You want to let this thing ride, and I think it easily could get to 650, if not 700, over the next month or two. But once that thing gets a little extreme, we also see that every time it does get that extreme, above 80 on its weekly RSI, it sees a big pullback, 25% or more. That would take the stock back down to its breakout level of $500, even if it got all the way up towards 700. So I guess my point is, ride the wave right now. For those who want to be a little bit more active in the name, take some profits on maybe half your position sometime in the first quarter as it gets overbought, and look to buy it back at a lower level for that big long-term kicker. Because I think this stock is going to continue to be a very volatile one, even though it's moving into the S&P 500.
Delano, on that note, inclusion in the S&P 500, I feel like people on Wall Street are watching it like a football game, like in a big sporting event. What do you think will happen?
I think more of the same. I think what you're going to see is, possibly some momentum buying or some game theory buying for folks. But I think when you have that inclusion to the S&P 500, what you're really saying is you're just putting more of that visibility for the stock. But I think you're going to see more of the same in the short term. It's a volatile stock, and we all know this, but the name is hot, and a lot of people keep talking about it. So I think the inclusion was a good thing.
Very hot on this very cold day. Delano and Matt, thank you for joining us today, and thank you for watching Trading Nation. I'm Seema Modi. We'll see you next time.
Next up, we have news on Elon Musk. Tesla CEO Elon Musk has told friends and associates he plans to move to, you guessed it, Texas. Musk said in May that he was selling all his homes and then proceeded to list his California properties. Friends and associates, he told them that he is moving, although there's no record of a change in his residence quite yet. Elon Musk's pay package from 2018 means he's getting significant stock awards based on Tesla's market cap increases and hitting financial targets. Texas has no state income tax, while California is the highest in the country. Smart move, Elon. Then finally for tonight, folks, we have Cadillac in trouble. About 150 U.S. Cadillac dealerships decide not to do the electric shuffle. About 150 General Motors company dealers have decided to part ways instead of upgrade required to sell electric cars, according to people familiar with the plans. I'll put all of it in my show notes, but basically they were offered a buyout, a couple $100,000 to $300,000, depending on the dealership. And they have to put in charging stations and get ready to make the transition to electric cars. And almost 20%, or 1 in 5 of those 880 Cadillac dealerships, did not want to take the deal. This is huge news. This is showing the resistance of how people cannot see the vision like you and I see as the world is, in fact, transitioning to EVs. That's all. Have a great weekend. Thanks for watching. That'll be all. Please consider subscribing to the channel if you like this content. You've been watching Tesla Today.